We're back with another Ideas for Profit. It is the earnings season. I am Ridhima Bhatnagar. Strong earnings growth and low valuation is making PNC Infratech an attractive stock, and we'll tell you why. Now, with a strong balance sheet, a more than healthy order book and a worthy execution order, PNC Infratech is an attractive stock to buy currently into the market. HDFC Securities has recommended a buy rating on the stock, and they see an upside of over 30% in the stock within the next 3 months. But the company also has a prudent balance sheet management that has added to its stock value. If you look at the strong order book, even amidst the pandemic, the front-ending infrastructure construction and the management company is sitting on a whopping order book of about 15,800 crores, which is about 3 times of its annual revenue that the company achieved in 2020. So even when the pandemic was wreaking havoc with lockdowns eating into the order book for almost every company in the infrastructure space, you had PNC Infratech, which grabbed orders worth rupees 4,200 crores just in the first half of the current fiscal. Now, the company has a strong revenue visibility as execution has improved the growth trajectory that is only now improving. So most of its projects are at advanced stage, and financial resources have been lined up with the help of stake sale in one of its BOT projects. New projects are also expected to now come up for execution as Infratech now expects appointment dates for the 4 HAM hybrid annuity projects and the 2 EPC projects, which would also help the company achieve better growth. Let's talk about it a little more. Now, improving its earnings outlook, that could be one key concern. The improving bottom line and a robust order book has made the company revise its revenue outlook from about 10% decline to now a flat growth. An improvement on the ground situation with removal of the bottlenecks such as unavailability of labor, equipment and material have eased considerably. This has prompted the company to raise its revenue guidance for the current fiscal. Now, though the September quarter, the company reported a 7% year-on-year decline, if you look at the numbers on a quarter-on-quarter basis, they're very, very encouraging, indicating that a strong pickup can in fact happen. So on the revenue side, the next fiscal will likely see a huge growth which can be led by large pipeline of under construction projects. Around 20 to 22% growth in revenue and strong rebound in earnings has been led by improvement in margins is also now expected. There is an attractive valuation. The low stock price, which is backed by a strong order book and a rebound in construction activities, have made many leading institutional investors from the likes of Goldman Sachs, Fidelity, SBI Mutual Fund, Nippon Life, India Mutual Fund and a few others that have dipped into PNC Infratech. Now, since the low of March 2020 at around rupees 80 a share, the stock has more than doubled to current levels of rupees 192 a share. It is currently trading at 7 times its fiscal 2022 estimated earnings, which is cheap in the light of the growth in earnings, quality of balance sheet and overall improvement in the outlook for the construction sector. But all of this comes with the risk factor. So what should you follow out and watch out for? There is a note of caution that investors might apply while considering to buy the stock. Execution of the current orders as well as timely financial closure, they remain a big challenge. Slow execution can lead to lower growth and contraction in margins. Additionally, given the fiscal constraints, the government's future spending on the road sector will also be a key factor in determining the prospect of PNC Infratech. But so far, the company has been able to manage its cash cycle very, very efficiently. But any deterioration in the same could pose a risk to balance sheet and return ratios, impacting the valuation.